I have something that I call my TASEE method. It helps to streamline my decision making. I have T is for trend, A is for above or below the key levels, S is the stop loss, E is the entry, and E is the exit. So that's TASEE. So let's first talk about the trend. When I log in, which is usually not until after 11 o'clock or at 11 o'clock, I start by making the 5-minute chart full screen and drawing trend lines from one swing level to the next. Now, right now, I have this on playbacks, and so I have it set for 3/4, so it's March 4th, which was a Tuesday at 10:55 a.m. And so I'm going to be playing this playback and discussing the move that I made that day. Okay, so we have the 5-minute chart. I'm going to blow up to full screen, and I'm going to go back here, and I'm going to try to find the tallest that shows on my screen for the day. So we'd start here, and then I like to do the wicks. And so I pull this here, this wick to these wicks, and so that makes a level there. That doesn't put us anywhere near our price action. So I'm going to go ahead and mark these here, and we might expect some type of breakout around here, but right now it's just going up along this trend line. You know, these two, we might be looking for a triangle breakout here. I've got my triangle breakout potential, and I'm going to look at the EMA Cloud, which this shows that it's red, fat cloud descending, but on the 5-minute chart, it's kind of deciding to change direction, and on the 2-minute chart, it's already changed direction. And I call these crossovers, but you know, they're reversals, and I have my EMA Cloud marking them to go up so that I can clearly see that there was a reversal there. So we're going to watch out for that and see if it's a true reversal. So we want to make it long, we want a green ascending, and if you were to take and draw a line from here to here, that's kind of the type of diagonal that is ideal, that if we see the candles making that shape or even a steeper shape, that's an ideal situation to be following that cloud. Red and descending would be a short bias, which is what we're seeing here, red descending. And then a flat cloud means it's consolidation, and we want to avoid trading in that zone. And then a fatter, more diagonal cloud, the stronger the trend. That's the T, trend in TASEE. A is, are we above or below key levels? So let's take a look at our 5-minute chart. This is our 50 EMA, and we're below it. So you want to avoid taking longs below the 50 EMA. You would favor shorts, the red candles. Above the 50 EMA, you would avoid taking shorts, and you would want to take longs or green candles. Is this above or below the cloud confirmation? So if it's above a green cloud, we would favor long trades. Below a red cloud, we would favor short trades. Okay, the MA gap is when you take the yellow, the 200 moving average, along with the backside of the cloud at this point, which will cross over here, and you see what is the distance here. Okay, now let's take a look at that distance. If it's above both the 200 EMA and the 20 EMA, we would favor long trades. If it's below the 200 EMA and the 20 EMA, we would favor short trades. What I'm looking at here is, does from here to here form a cavern? Has it gotten so steep of a difference that the price, like we've got a $2,000 difference here, and so it's like, is this ready for reversal? And I would say, yeah, it is. Now compare it to up here. This was very close together. Now, next, we're going to talk about risk management. We want to use the risk-reward drawing object to mark the height of the last red candle body. So if you're at a point where you're considering getting into a trade, you want to mark that candle body of the previous red candle. So for our risk management, we want to mark the height of the last red candle body before entry. And here's an example. So here's the height of the red candle body is below where our entry would have been, and that's $85. Basically, if we're entering here after the green candle goes above the body, that is $190. We want to check the height of where we would have our stop so that we can ensure that it's within our what we can afford and that we're far enough away that we're safe. An aggressive approach, you would put your stop loss right here below the candle body. I've got my arrow backwards. And if you want to place the stop loss below the wick, which provides extra protection against price fluctuations, making it a more conservative choice. Now let's go ahead and we're going to try to find a good entry point, and we're going to play this trade out. Now notice that we're still below the 50 EMA, the white line, and we want to be above that. Okay, I'm going to speed this up until we're above it and I see a good entry point. Now, one thing that you need to remember is that price goes up, but it's always going to tap down, or price goes down and it'll come and tap up. So if we're going to have a green crossover and it crosses this line, we don't want to make any trades until we're sure it's on the other side of this line. So we're waiting for that, and I'm going to speed it up some more. And what we're looking for is, we see this is now ascending, but we don't want to enter. I'm going to pause this so I can talk about this. We never want to enter when price is off of the line. We want to wait, because we know when it's off of the top of the cloud that is going to catch up with us, and it's going to say, hey, it's time for a red tap down. So if we had entered on this candle, it wouldn't have had the tap back down to the cloud. Plus, it's a skinny candle. We want an engulfing candle. So we're looking for that tap back down to this cloud. Trust me, when I say I'm waiting for it to tap down, I'm waiting for it to tap down, and then I get in willy-nilly because I'm FOMO, fear of missing out on this candle, then I always regret it. I always regret it, because then the red candle comes and I'm like, why didn't I wait? So always wait for it to tap back down to that cloud. Okay, so we got to tap down to the cloud. Okay, now I'm going to slow this down again because I don't want to miss a good entry. Okay, so now what we're looking for is we want a big fat candle. Okay, now notice I have the equal volume candles on. And so that helps you see that, oh, wow, this is getting fat. I want to get an entry here. This cloud isn't as fat as I would like it to be. It's still kind of skinny. Plus, over here on the 15-minute chart, the candle is red. So we always want to look at these equal volume candles. So this shows red's in control now on the 15-minute chart. We don't really like that. Okay, so we can see that we got some chintzy candles over here. We want to make sure that they get nice and fat. Over here, we want to take and draw a trend line going down off of this candle and look for a breakout, but we're also looking for an engulfing candle that's going to take up the whole body of this candle. So this one broke out and then sucked back down below A. So we want to make sure that we're above the 50 EMA when all of this happens. We don't want to have a 50-50 chance. We want to have more than a 50-50 chance of having a good entry. And so we're looking for a big fat engulfing candle. We're looking for it to come up off of a cloud tap from a red reversal. And we want the green to be fat and ascending. Right now, it's not as ascending as I would like it to be, and it's not as fat as I would like it to be. Okay, now notice here our Heikin-Ashi has now changed to green for the 15-minute and the 5-minute, so green is back in control. We're going to speed this up a little bit. Okay, and it looks like we're Getting a nice big fat candle coming now. And we're going to go ahead and enter on this. And we're going to move our stop down below our previous candle. And we have our profit target set to $1,000. And we want to watch this play out. Now notice it tapped off of this triangle that we drew earlier. Now we could have taken a profit. This is where I was talking to you about measuring the candle to see if you could afford it. So it's $140 candle. If you go down below the previous one, $185 candle. Also, from our entry point here, you could see that it hit 460, 470. So we could take a profit there, but we don't know if it's going to break out and keep going. So we don't want to take any chances of missing a good trade there. Now notice I have the speed is still on 8 times, but I'm on the 5-minute chart. So our entry strategy, we want to never trade when the price is at a 15-minute flat cloud. And so when we entered our trade, it was starting to ascend a little bit, so we're basing it on our 5-minute entry, because if this cloud is flat, and especially if it's a long flat that it's been that way all day, just do something else that day and go away, because now you're in trouble and you will probably not get any good trades. For our entry, we want to identify that EMA gap. Was it far apart or was it close? Well, it was far apart, so it indicated that it's going to reverse. So we measure the distance between the 20 EMA and the 200 EMA. A narrow gap is a small cave pathway. Imagine that you're, playing a video game and you've got a small cave pathway that expands into a cave and then eventually becomes a massive cavern. So if it's a narrow gap, a small cave pathway, this signals sideways movement. Avoid trading when the dragons or price action are stuck inside the cave. Wait for the breakout. I like to call the candles dragons, red dragons and green dragons, to equate them to playing video games. Okay, now when the widening gap comes along and the path expands into a cave, this signals a good trade setup. So we've got it now that it's narrowing up here between the 200 EMA and this cloud. Then we have the peak width, which is the massive cavern, which we saw earlier here when it was at its all-time low of the distance here. We went to check the 15-minute Heikin-Ashi, which is green, and over here it's green. Well, now it's green. So this is for our entry. It was green when we entered. We draw a mini trend line, which we did draw the mini trend line, and then we waited for price to be above this red candle and above the 50 EMA with a fat candle, which is what we did. Okay, then we want to enter a long trade after these 3 conditions are met. a red candle taps down, that's right here, to the top of the 5-minute green cloud or the 20 EMA, red candle tapping down. A mini trend line is broken where it was broken here by a strong green candle, and a fat-bodied engulfing green candle overtakes a prior red candle, which happens here, a fat one, because see, these turned into wicks. They didn't overtake it, they wicked out. So now it's overtaken, and its fat green candle overtook the red candle. We want to avoid these weak candles with long wicks, and we want to stick to the long, the big fat candles. Okay, so now we have prices floundering around at this 200 EMA, and it's reversing. So the question is, do we get out, or do we think maybe it will go again? So this is where we're looking for our exit conditions. So we have green candles signaling upward movement. Red candles indicate a pause, a reversal, or consolidation. So here we have red candles that did a reversal and this consolidation. Now we've got more red candles doing a reversal, tapping back down to the cloud, and that is normal. We are going to get at least 2 to 3 or maybe even 4 taps down to the cloud before the move is necessarily done. We've set our profit target for 100 points or $1,000, but you could set it as high as 2,000 and then just manually watch it as it goes. But I do recommend, to begin with, you want to be more conservative and make sure you hit a good target. If the target isn't hit, and after 2 to 3 reversal groups or consolidation, and we've had 2, up here on the 5-minute chart, be looking for signs of exhaustion. So we're going to check the Heikin-Ashi. It's still green, and we see that the trend color is still in control. And see, that's going back up over the 5-minute candles. Okay, then we exit if the MA gap has become a massive cavern, which it has not. It's still low. The candles are repeatedly tapping off of a swing level at the cavern level. We do not have a swing level here, and several reversal groups or consolidations have already taken place. We've only had 2. So it's still in the consolidation phase. And so you want to have common sense, though. You do not want to hold too long and risk losing your profits. So that's the TASEE, the TASEE trend. Identify the direction, which is long. Is it above or below the trade, the 50 EMA and the 29 EMA prices above it? Do I have a stop loss in place to protect myself? Yes, I do, and did. And my entry, we enter after the cloud tap, which we did, wait for the cloud tap, and we exit secure profits based on the measured move. So we did that, and now we're done. Okay, now this move is not done, though. It's still going a strong green. So we do not want to get back in on this because we've gotten a pretty good chunk out of it. And I would say, especially for beginners, this is the end of your day. You got your thing. Now let's look. We marked this triangle here, remember? That's the first thing we marked. And we were looking for a triangle breakout. So we took that trade earlier based on the things that we already talked about. But say that you want to be more, a lot more conservative, and you see this and you go, oh, I'll wait. So, okay, we got a red candle tapping down, or say you didn't get in until after lunch. You couldn't trade until your lunch hour, this is Central Time. So you could say, okay, I got a big fat candle breaking out. I'm going to take it up. That's going to get me $500 right there, hitting that 200 MA. But if you hold it through this going back down again and go freaking out that, oh no, I could have had $500, but now I've only got, $80, it can go back up again. But, you know, there's no guarantee. So if you're happy with a 500, set your profit target to 500 and catch that 500 or close it manually. But otherwise, look at this thing. It's going back up again. And I bet it could easily hit another $1,000 if you get in a late lunch trade. So, you know, it all depends on where you're entering. But the point here is that you don't have to get that perfect trade and log in and go, oh crap, I missed it. Because look at this. You draw that trend line thing, you see a triangle breakout, you see the red candle tapping down and the green going up, but it didn't engulf it because it's a skinny candle. Now this big engulfing fat cow candle comes along and you're above it, and now you can enter and you can catch that again for the $1,000, and it made $1,000. So yeah, don't feel like you can't trade at different times of the day. Say you didn't get in until after 12:30. Okay, so we draw this, breaks out, gets fat engulfing, and we know we can now enter. We're going to draw our trend line here, and it goes up, and it's not quite a breakout yet because the majority of the body is not outside the trend line. The majority of the body, it's only half. So now you wait for the next candle, which it came back down red. Now it turned green, and now we could get in again. And this is where we can now take another almost $1,000 trade, you know. And so if we look at from the original crossover, we have now 1, 2, 3, 4 groups of red candles. And this is definitely, this would be the 5th. And so now you're kind of risking, am I going to lose this or not at this point? Because you've got, oh, sorry, should have had that going on the screen. So that's what that looks like. So now you're kind of consolidating. And so if you want to, you might look at this and say, well, as soon as this taps up here or gets close to it again, I need to close out this trade. So you could move your profit target down to the top of this, because you don't want to do more than 3 or 4 of these things from the good entry. Now you can't say from your entry, because your entry was late here, your entry was late here, but this would be considered the good entry here. And so you've got 1, 2, 3, and you're sitting on your 4th, and it is time to close out that trade and get out. It's, notice here over on the 2-minute chart, it's forming a swing level, and that's a sign right there that, yeah, it's probably time to exit this trade. Yep, that went up. I mean, you can play the bet and see if you can go higher, but I'm going to mark this high. So we did hit our next $1,000. And now I'm going to speed this up, and we're going to see what would have happened. That woulda, coulda, shoulda. So we see it's still floundering around with the green candles. Hasn't given up on them. Our 2-minute chart is still going up. But you don't want to live in the let me wait business, because look at this. Red would have sucked you back down, and there would have been no recourse from that. You would have, you know, if you had entered here, you would have already stopped yourself out. If you had entered here, you would have stopped yourself out. So you got to watch those. You got to take from the beginning of my trade, which the first, after the crossover, that's your entry. Count them. 1, 2, 3, 4. That's where it's time to start getting out, about the 3rd or 4th one. And then you could have gone up to your 5th. And that is, so let's see, this was our entry here. That would have put you at 2,300. but you don't want to take that risk because the next candle went down. And so you have to be very careful about that. Okay, so that's our demonstration today, and that is with longs. The same thing is true for shorts. And so what we show here is, let's take a look at these candles here a second. I don't trade at open. I refuse to. There's big wins at opens, but there's big losses at open because look at the tail bars on this. They're going crazy and up and down, and you have to have a lot of stop loss to keep from getting stopped out on this. Okay, so like the previous candle here was a $300 stop loss. Who wants a $300 stop loss? So we're going to go here and we're going to say, but let's assume this was at a decent time and the price wasn't all moving so fast so that we can demonstrate this. So we have our trend is red. Our A for area is it above or below? It's below the 50 EMA, and it's below, the candles are below the cloud. Green comes up and taps up. We would draw it originally like this. So we follow the wick, and you don't have to follow the wick. I just think the wicks are the safest way. And then you've got over here, you're going to take a short, and that took us to 970. If you had gotten it over here on this big, huge candle and gone down, you would have hit your 1,000. So it's the same story over here, other than that I won't trade at the 8:30 open, 8:30 Central Time open. You can get just as good money later in the day, because this one hit 2,310 as the top, so you could have easily made your $2,000 without the whipping around and the tail spins and all the crud that happens over here on the opening day trade. Plus, I can't get up that early. Okay, so I think that's it. TASEE process, and I want you to remember that because it's trend. What is the trend? Is it above or below the 50 EMA and the 20 and 9 EMA cloud? Is this, if it's above, you want longs. If it's below, you want shorts. Is the trend, is the cloud red or is the cloud green? And is it ascending or is it descending? Red descending, green ascending. Stop loss is that you put your stop loss below the current candle or below the previous candle, depending on how conservative you want to be. Your entry, you want to enter after the cloud tap, and when the candle becomes a big fat engulfing candle and is above the previous red candle. And we also waited for the 50 EMA here because this was a crossover, not a cloud tap. This is a cloud tap. We wait for the candle to be above. This is a cloud tap. We wait for a candle to be above. This was a crossover with a cloud tap. So the crossover, we still have kind of a skinny thing, and we're waiting a little bit for it to fatten up. Imagine that you're, Hansel and Gretel, but you're the witch waiting for them to fatten up. Oh, sorry. Okay. So then we want to exit, and our exit is E for exit, and that is based on 3 color changes and consolidations to 4 color changes and consolidations. And then we want to get out of that puppy. We don't want to hold so long that then it comes crashing down like this did. Okay. That's it. Thank you for putting up with me. Bye.